Folks, just looking at a chart of Apple here, it's one of my favorite stocks. If you've been following me for a while, you know that I've traded it many times. In the last 12 months, I've probably made, over 1,000% return in Apple alone. So it's definitely one of my favorites. I do feel that I've mastered it because I've been trading it for the last 10 years. Of course, that doesn't mean I'm always right. I'm always cognizant of the fact that I could be wrong in any trade, so it's very important to acknowledge that and always manage. As a trader, we always need to manage our risk accordingly. This particular, if I look at this, I can see that Apple is what I call in a triangle formation, or what's also commonly known as a wedge. And there's a couple of ways that you can trade this pattern. You can buy a call and a put option at the same time, known as a straddle. And then if and when Apple breaks, in one direction or the other, you basically take off the other side. So if it breaks to the upside, you close your put position and then you continue to trade it to the upside. I'm of the opinion that regardless of this triangle formation, I do feel this is a bullish pattern. The stock originally has come up back here from earlier in this year from 105 all the way up to 135. We've seen a nice pullback, probably not as significant as what we've seen in the past, albeit it's still a pullback to this level down back to 120. And if we measure that, I think it's probably around about 50%, or so about 38%. Now, that may not be a significant pullback, but it is a pullback all the same. From there, Apple stock has really been consolidating for the past 2 months. So, we can see here there's a small trend line to the upside. It is a strong stock. I'm looking also at the Nasdaq. It also seems to be in a bullish pattern. It's moved up, had a pullback, consolidated for a while. I think we can also get a move to the upside. Up around this 44.80 mark on the Nasdaq would be the next key level of resistance. So there's a bit of a gap that needs to be filled here, and it's for that reason that I feel Apple could also make a break to the upside. I would expect Apple to move up to its previous highs, up around to this $135 mark. Of course, we could be wrong, and Apple stock could collapse from these levels. It has had a fairly good run over the past 12 months or so. So we always need to manage our risk, and therefore we need to have a level that we acknowledge that if the stock does in fact trade and it goes against us, then where are we wrong? And I would say where are we wrong, to answer that question, will be under this last pullback level. So if we trade below 120, 122, I wouldn't want to be in this particular position. So for me, I'm looking at putting in a trade, constructing a trade that benefits as Apple moves up to this 135 level, and I don't expect it to take too long, so I don't want to be in the trade for too long. I would expect it to do that within the next couple of weeks. So the trade that I've put together here is a spread where we're buying some options and also selling some options. Notice I've only got 21 days to expiry, and if you look down here at this $135 level, the cost of the trade is close to $1,000. And at this $135 mark, if Apple here's the stock chart here on the left, if it does reach to this 135, I can put my mouse over here, you can see it's close to a $1,000 profit, which means a 100% return on investment is what I'm expecting if the stock does move in our direction and does in fact reach our target. Of course, as the stock's moving up, we can see our profit is also increasing. I would hold this trade all the way to the end. This purple line here represents approximately 5 days remaining to options expiry, and if we can hold on to our position up until then, and Apple is around 135, then you can see the profit there would be roughly $1,231, so a bit over 100% return on investment. But of course, once we reach that 100% return on investment, which if we just scroll down here, we can see is only 5% away. Apple stock only needs to move up 5%, and we are able to achieve a 100% return on investment. And Apple only needs to move just above 133, 134. Now, that's well within our target of 135. So once Apple does reach at 100% return on investment, I will look at possibly either closing the trade or adjusting it. Or I may decide, depending on the chart pattern, to hold it until close to the options expiry, because this particular spread actually benefits as time goes by. And the other thing that I'll say here is that if the stock in fact doesn't move, for example, right here, the price of Apple right now is represented here by this light blue horizontal line where we can see the price is 127.10. If the stock in fact doesn't move, meaning time is going by, which are these colored lines moving to the left, I'm actually going to be losing money because options decay over time. So for example, if we are at this green line, which means roughly 10 days have passed and Apple hasn't moved, which in my view is highly unlikely but definitely possible, then this position will be at a loss of around $261. So not only do I have a stop loss, a line on the chart where I acknowledge the trade is void if the stock trades below 120, but I also have a time limit. The stock must at least start moving in the desired direction within the first 2 weeks. And if in fact the stock doesn't move within the next 10 days, then I'm also going to close the trade for a potential loss of around $261. So because we're using short-term options here, folks, this trade is categorized, in my view, as a high-risk trade because we don't have a lot of time to be right, and the stock must move in our desired direction for us to make a profit. So folks, happy trading and always manage your risk accordingly.